I'm Juliette Sarli. In this week's edition of IG Macro Intelligence, we take a deep dive into Ingham's chicken. Full year 24 was the most successful year for poultry producer Ingham since listing on the ASX in 2016. Profit rose 68% in the year to $101.5 million, revenue up 7.2% to $3.3 billion. The result boosted by a near 3% rise in group core poultry sales, while Ingham's was also able to charge more in the period. However, total costs went up by more than 6%, driven by high internal feed costs and increased costs of sales. Ingham's declared a total fully franked annual dividend of 20 cents per share, up almost 38% from full year 23. Ingham shares plunged after its result as the producer flagged a cautious start to full year 25 amid cost of living pressures and a change in its Woolworths contract. Ingham's will remain Woolworths' #1 poultry supplier. However, there will be a phased reduction of volume in its multi-year supply agreement. CEO Andrew Reeves told AusBiz he's confident the business will be able to absorb the changes after also securing significant new business from other customers for full year 25.
We've also had our biggest customer is Woolworths. They remain our biggest customer, and we are their biggest provider of poultry products. But there's been a change in that contract, which is seeing a short-term a reduction in volume, which will work its way through the system across the course of the financial year. That's a very manageable transition. We will be able to mitigate that change across the course of the year. We'll be able to allocate that volume elsewhere in the market. So I'm not particularly concerned by that at the moment.
However, analysts have downgraded their outlook for Ingham's following its cautious outlook on full year 25. Multiple indicators show Ingham's shares are in a long-term bearish trend. The 5-day moving average is beneath both the 20 and 50-day moving averages, which is a sign investors see little opportunity in owning Ingham's shares at this time. In the wake of its full year results, Macquarie cut its price target on Ingham's by 17% to $3.50. Bell Potter slashed its target price by 24% to $3.30 a share and downgraded its rating to hold from a buy. UBS has a price target of $3.35 for Ingham's, down 18% from its prior target of $4.10. UBS has maintained its neutral rating on the stock though, and notes that Ingham's efforts to replace the lost volumes from its changed Woolworths contract should provide some comfort for investors. And meanwhile, Stuart Roberts from Stocks Down Under told AusBiz the recent sell-off provides a good entry point, so long as you sell out at the top. And that is your IG Macro Intelligence for this week. We'll see you next week.